From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 27th, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Before I begin the analysis, it's important to note that at 4 p.m. Eastern U.S. time today, Wednesday the 27th, we do have interest rate news and rate statement out of New Zealand. But that's several hours away, 4 p.m. Eastern U.S. time. So keep that in mind if you decide to take a trade on this currency pair. Taking a look at the daily time frame, we have three different trends really that we want to first focus in on. The blue trend on the left-hand side, the rising trend, the red trend line, the falling trend, and then kind of a rising channel here between the two black trend lines over on the right-hand side. What's important here is that we have broken through the bottom of that channel, the black rising channel. We've broken through the bottom of it and testing supports lower. Something else to think about, and let's go ahead and zoom it in one time, is that we're underneath the 100 period moving average. Now let's not get fooled into this, because if you take a look right here, we got underneath that 100 period moving average as well at the bottom of the red trend. It came down, got underneath it, we thought it was going to go lower, and then turned right back around and went back up. So just because it's underneath the 100 period moving average doesn't mean it's going to go down. It just gives us another piece of evidence or clue that we might be looking for it to potentially go down. So that's something to consider. Underneath the rising black channel, underneath the 100 period moving average. What I really want to focus in on is 71.95, 72.25, the green shaded area that we see right here. It's really going to be easier to focus in on it on the 4-hour time frame. But one more thing before we go down there, we can see that the Forex Black Book this week has turned red. So we've had a pretty significant bearish movement to cause the momentum indicator to turn red, giving us a bearish bias. Now what I want to do is go down here to the 4-hour time frame and kind of scroll back in time and take a look at the green shaded area here. We can see right now what's happening. Several hours just kind of stagnant right around the 7200 level, 71.95, 7200, right at the bottom of our green shaded area, just kind of sitting here. We could even take a little box and put it right here. Let's just make this a little box. I'm going to make it a black box just to make it easy to see. So you could put a little black box around this area and say we're kind of stagnant right inside that little black box. We're going to need a breakout. So let's go back in time again, 71.95, the green zone. Take a look at the blue circle. The market came down, couldn't sustain a breakout underneath 7200, turned around and went back up. Then the black circle, we can see the market came down, couldn't sustain a breakout underneath 7200, turn around and went back up. We did have this instance right here where the market did get underneath, and where did it go? It went to the yellow zone. So that's a clue for us. If the market can break, and I'm back to the right hand side now, if it can break underneath the little black box, the green shaded area, we already have a target to shoot for. That's the yellow shaded area, 71.50.35. So consider that right there in the middle. Now let's keep going back. Take a look at the blue circle or oval here. Couldn't break through 7200. Turn around and went back up. Let's keep going backwards in time because I think there's more evidence right here where this blue oval or blue circle is right here. We can see the market came down into that same green shaded area. Couldn't break through it. Turn around and went back up. We go back here where the black circle is, and this one's unique because it was coming up from the well below it, but once it got above it, look at the struggle getting back underneath it. It tried to get back underneath it here, couldn't, tried to get back underneath here, couldn't, tried to get it back underneath here, couldn't, and then went back up. So clearly the point of interest is 71.95, 7200, about a 5 pip rate area there, right at the bottom of the green zone. If it can break underneath it, obviously the yellow zone is our target, but that's going to imply that we must see a break of that green zone. If it can't, and all of the history tells us that if it can't get through that green zone, we might see it turn around and go back higher. So if we're going to go short, if we have any inclination to go short because the momentum right now and the sentiment for the currency pair has been bearish, then we must see it break through 71.95. We don't want to get fooled into it, thinking it's going to, and then it turns around and goes back up. So it must break through there. For me, that's going to be a single candle body, open and close underneath the 71.95 level before I have confidence or increased confidence that it's going to go at least down to the yellow zone, if not further. Keep in mind a couple of things that we have going on today, Wednesday. We have durable goods out of the U.S. coming up at 8:30 a.m., just a few minutes from the recording of this video. We have one of the FOMC members speaking later today, and again, that interest rate news out of New Zealand. So all of that could change it, but that's the imperative. It has to break 7,200, 7,195 before we can see this currency pair go lower. Otherwise, back above 7,225, if it's able to get back above the green zone, we already have an idea. History tells us back to the orange zone or higher for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.